Well, this afternoon we've got Jacob Mitchell here with us. Welcome, Jacob. Now, you've been with Platinum, I think, for 14 years, and now you're the founding partner of Antipodes Global Investment Partners. Do you want to tell us a little bit about the difference between Platinum and what you're doing now with Antipodes?
Thanks, Ian. At Antipodes Partners, we describe ourselves as a pragmatic value investor. That means we're looking to buy great businesses, but also at a great price. Now, the problem is the market typically is aware of what a great business is, and so it doesn't often become cheap in the market. So when that happens, it's typically around changes in the operating environment that business faces. Cyclical change at one end, structural change at the other end, and it's a continuum. And there's also socio-macroeconomic change that impacts business. When markets become irrational around the longer term impacts of that change is when you get the opportunity as a pragmatic value investor to buy a company with a margin of safety, with multiple ways of winning. Now, it's not good enough just to buy great individual companies. You have to think about how the portfolio works in totality. So we call that non-correlated sources of alpha. We want to buy 30 to 50 great ideas that work well as a portfolio. If we do that well, we'll deliver absolute returns ahead of the benchmark over the investment cycle of 3 to 5 years. Now, the good thing is we can also express that, long, short, and also with currency management.
Do you have any geographic limits that you set yourself, or does that not concern you?
We're in no way constrained by a benchmark. We invest where we see the opportunities. And however, in terms of that non-correlated sources of alpha, we are aware of where concentrations of risk are building up in the portfolio, which is more than just geographic exposure. It's also end market, factor exposure, other ways of thinking about risk. They're the limits that we enforce on ourselves rather than just benchmark geographic limits.
You're a global fund, and we're sitting down here in New Zealand, way down here in the Pacific. Now, the reality is we've been very isolated, and that's been a negative for a long time, but it appears as though it's becoming a bit of an advantage. Look at the New Zealand economy. It's doing well. So the question is, why does a New Zealand investor look to invest away from that backdrop?
Clearly, the opportunity to more broadly in global markets to gain exposure to industries that are not available here locally, and secondly, it's just the diversification benefit of being able to gain exposure to non-New Zealand assets. Whether you want that's sort of a different question. I think people going beyond the obvious, if you think about Australia and New Zealand, a lot of our economic outcomes are correlated to China and Asia. So it's thinking about the context of that risk. But I think you're right. I mean, both the Australian and the New Zealand economies have shown a degree of flexibility, and part of that has been the benefits of a weaker currency that has surprised many.
When you look at the portfolio and you look at where you're investing, where do you see, when you're balancing risk versus reward, where's the big opportunities at the moment?
So clearly there's a bias being expressed in the market around certainty, and people express that the desire for buying growth or profits because the perception is we're in a low growth environment. We think that's going to hang around for the foreseeable future, that bias. However, rather than being focused on top line growth, that's proving to be more and more elusive. We think investors should focus on pricing power. Invest in companies by virtue of their uniqueness and their market structures that have pricing power. Now, it doesn't mean they don't necessarily have to be defensive businesses. Some of the more cyclical businesses in the world, by virtue of the fact that the industries have gone through shakeouts, where the leaders are emerging more strongly, actually have the greatest latent pricing power.
For investors out there, where do you see the next wave of potentially good news?
Look, there's some big, obviously the longer term growth trends around emerging, whether it's the emerging middle class, the fact that technology is is lowering the barrier to entry for to the modern globalized economy. In not just in an obvious emerging markets, but just access to information and the speed at which innovation is taking place. If you can benefit from that and without overpaying, then that's a big long-term story. So be selective. Growth. There's clear growth trends that you want to be exposed to if you can buy them at the right price.
Thank you very much.
Excellent. Thanks, Ian.